Good afternoon. My name is Clive Richardson, the Chairman of Albion Tech and Gen, VCT, and it's my pleasure to welcome you to the company's annual general meeting. Alongside me today are my fellow directors, David Bender, Simon Fall, who is the Audit and Risk Committee Chair and previously on the board of Albion King's Arms Yard, as were my other fellow directors, Swarupa Pathagji and Fiona Woolakan. As stated in the merger circular sent out to the shareholders of the company, Fiona will not be seeking election today, and on behalf of the board, I'd like to thank Fiona for her guidance during the merger of our companies and wish her continued success in her future endeavours. So thank you very much. Likewise, I'd like to take this opportunity to thank both Margaret Payne and Peter Morehouse, who left the board at the time of the merger, for all their contributions. Also present today is Will Fraser-Allen, the Managing Partner of Albion Capital, the company's investment manager. He will shortly give a presentation on the results of the company for the year ended December 24 and will join me for a Q&A session later. Moving on to the formal business, the quorum for the AGA is 2 members entitled to vote in person or by proxy, and I can confirm this has been met, and therefore I declare this AGM open. The notice of the meeting has been in your hands for the statutory period, so I will take the notice as read. To maximise engagement with shareholders, the board have again arranged for the Lumi team to broadcast this year's AGM using its online platform, which enables members to interact fully, including taking part in a Q&A session and voting on the board's proposed resolutions. Before I hand over to Will for his presentation, I'd just like to explain how the voting process will work. But let me first state that if you have already submitted a proxy vote to the registrar, you don't need to vote again unless you wish to change your vote. The resolutions will be voted on by way of a poll. The votes received under this process will be added to the proxy votes that have already been received and verified by the independent registrar, Computershare. Once I declare the poll open on the Lumi platform, a list of resolutions will automatically appear on your screen. Please select the option that corresponds with how you want to vote, and the option will change colour and a confirmation message will appear to indicate how your vote has been cast and received. To vote on all resolutions displayed, select the Vote All option at the top of the screen. If you want to change your vote, you have the option to reselect your choice. Should you have any questions on the voting procedure, please send them through the platform and someone in the Albion team will respond promptly. Thank you. I now declare the poll open. Following the manager's presentation, the directors and the manager will take questions from members on the company's financial results and proposed AGM resolutions. I'd like to thank members who have already submitted their questions and queries through to the chairman's email address. Thank you. And if you want to ask questions, please select the messaging icon from within the navigation bar and type your question at the top of the screen. Click on the arrow icon to the right of the text box to submit your question. Please do so as soon as possible so that it reaches us ahead of that section. I'm now going to hand over to Will Fraser-Allen for his presentation. So over to you, Will.
Brilliant. Thank you very much, Clive, and a warm welcome to all our shareholders who are attending virtually today. So if I may, I'd like to take you through the results for the year to 31 December 2024. But before I do that, let me just sort of set some context, because I think we continue to live in interesting times, and it seems to get more interesting by the day. So it has been a year, and indeed we continue to be operating in an environment where there is significant geopolitical uncertainty, and that does feed through to some macroeconomic challenges too. Inflation is falling, but interest rates continue to be elevated relative to historic levels, and that in itself gives challenges in terms of valuing future cash flows of our businesses. That said, we've got an interesting portfolio, and I'll be talking to you about a number of companies. They do typically provide mission-critical products and services to their customers, so that is intentionally to provide resilience, i.e. the customers are using things that they can't afford to be without. But also we are in a year where there's been a significant change for this company, and that was the merger with Albion King's Arms Yard VCT on the 19th of December. And I've got a couple of slides just to remind everybody of what that involved and why we did it. It's been a positive year. We'll talk through that. And I'll also be able to give you a view as to the results for the first quarter of this year, which have just been announced to the market. So if I go on to the next slide, we'll just cover the mergers at a sort of Albion level. So if you, those who have been shareholders with us for some time will recall that we managed 6 VCTs historically, and the objective of the merger was to reduce the number of VCTs that Albion managed from 6 down to 3. And this was done for a number of reasons. I just pick out the sort of key ones here. Partly it's a question of scale, so ensuring that each of the VCTs are larger and therefore a larger asset base over which to defray costs. And as a result, there were some meaningful cost savings to be achieved by doing that. But it also had the advantage of standardizing a number of things across the VCTs, particularly the management, administration, and performance fees, so that all the VCTs now are operating under a single charging structure. And importantly, it was designed to reduce administrative complexity. And that's both for you as shareholders, particularly where you hold multiple VCTs, but clearly there are administrative benefits to how Albion is able to run its business too, to the benefit of a more efficient service to the VCTs. If I go on to the next slide, narrowing the merger description down to specifically this fund, this table gives you a sense of what the merger means in numbers. So across the top, you've got Albion Technology in the first column, Technology General in the first column, King's Arms Yard in the second column, and then what the effect of the merger is. And this gives a really good sense that what were relatively small VCTs, it's now a 245 million VCT by net asset, and cash across that sits at about 50 million. So it's a decent sized VCT now with good cash resources to deploy in the market, both supporting its existing portfolio, but also making new investments. So with that background, let's move on to the results themselves on the next slide. So the top level, NAV, and this is for obviously the Technology in General VCT. So NAV ended at year end at 73, just over 73p. Total return, which is NAV plus all the dividends paid to date, it's over £2 now, so £2.04. But I think really encouragingly, and I'll give you some background as to why, we delivered a 6.57% return for the year in what was a quite difficult year in terms of the world in which we operate. And that gave rise to a dividend payment of 3.68p. But let's dig into the detail of what drove those results. Firstly, looking at performance longer term. So we've, on a 10-year basis, we're sitting a little bit below our target at the moment. So shareholders will recall that we have a target dividend distribution of 5%. So it's important that we are covering that over the long term. So we're a smidgen below that. And that's really a reflection of the last 3 years, which has been a particularly difficult period for tech investing. And it's in that context that it's nice to see the last 12 months return at 6.6%, hopefully moving forward in the right direction. But if we go to the next slide, we can dig into that 1 year return in a bit. In terms of what are the main highlights, well, the company had a successful fundraising, so raising a little bit more than last year. In terms of exits, 6.9 million sold in the year, and that was a big chunk of which was driven by the sale of Egress Software Technologies, which was 5.8 million of it. I've got a slide on that, which some of you will have seen last year, but for completeness, I'll run you through that. Good investment rate in the year, 10.5 million invested, and that was across both 7 new companies, but also into the existing portfolio. Share buybacks a little bit up, to be expected given the increased size of the VCT, and then dividends similarly set at that 5%, but again in absolute terms will be higher because of the size of the company's increased. But turning to the next slide, what was driving the value and what was detracting from value. Quantexa, which is our largest investment in the portfolio, and I'll come back to that in a bit, saw good growth in the year. That's a business that has grown substantially, is now becoming a significant software business in its own right. Similarly, Gravity has made good progress, winning a number of new customers. Against that, as you would expect in a venture portfolio, there are those things that don't go to plan, and it was a shame to see Nouveau Air being written down on the back of uncertainty about the company's future funding. And then Radnor House School, it won't come as a surprise to you that it has been impacted by the government's decision to impose VAT on private school fees, which has resulted in a significant additional impact on our pupils, not all of which we've been able to pass on. Elsewhere in the portfolio, and as detailed more fully in the annual report, we have a number of write-ups. Egress, as it came to sale, Aviva being noticeable write-ups, and then Tokyo and Peak Data that saw more difficult trading. Moving to the next slide. I won't dwell too much on this because this will be familiar to many of you. Portfolio is now 74 companies, encouragingly employing 4,400 people across those businesses. So an important part of what we do is that creation of jobs, and typically highly paid jobs by virtue of the fact that these are typically software developers, senior marketeers, and the like. But the portfolio is broadly where we aim to have it. So if you take fintech and software generally, that's now over 50% of the portfolio. We'll follow with healthcare at about 17%. We have a bit of renewable energy assets, which are historic ones that we retained to benefit from the income. And then what you're starting to see coming into the portfolio is a little bit of deep tech, which is a theme that we are looking to develop over time. And then you've got what is effectively the two schools. Moving to the next slide. So the portfolio is looking reasonably well mature in terms of stage of investment. So we've now got 74% of the portfolio by value in businesses with revenues over 5 million. And that's a sort of sign of where we are at this moment in terms of what the portfolio construction looks like. And that's sort of mirrored to some extent by the right-hand slide, which is looking at how many employees. So you've got now 57% are employing 49% are employing more than 100 employees. So you're getting this sort of relatively mature portfolio, and I'll come on to what's driving that, which is some sizable investments coming through as they grow. So if we go to the next slide, this is a good slide to that point because it looks at the top 3 investments in the portfolio, and as a reminder that one of the consequences of a venture capital portfolio that is being successful is that you are looking to grow some quite large businesses, and importantly, you're looking to benefit from that growth for as long as you can, and that does lead to an element of concentration in terms of portfolio value. The 3 big ones, Quantexa, Pravica, Aviva. Quantexa made good progress in the year. Since the year end, it's gone on to do a substantial Series F fundraising. It's announced annual recurring revenues, so that's the main measure software companies use as a proxy for revenue of over 100 million now. This is becoming a substantial global business, helping some very significant companies, particularly banks, analyze their data in areas such as the detection of financial crime for banks. Pravica is our children's medicines business that continues to make good progress. And then Aviva is also in our healthcare portfolio, which is a platform that allows dietitians to treat their patients, and it's done on a software platform. And as a result of that, they are seeing substantial growth around the increasing focus of various European healthcare systems on diabetes linked to obesity, but also in supporting some of the weight loss drugs that are coming to market, where wraparound care is part of delivering a successful outcome for patients. So that's a business that is growing very, very fast indeed, but has both a UK element, but is also has a European aspect to it too. So those are the sort of three substantial businesses in our portfolio. And the key takeaway from this slide is that the book value in aggregates at 80 million is just under 32% of the total NAV of the fund. Next slide, please. Lots of new investments in the year. I don't propose to go through them all one by one. Trufera, Iron8, probably the likes, but this is a mixture of our focus on B2B software. In particular, Iron8 I'll pick out because it's specifically within the deep tech strategy, and this is developing a type of transformer that will assist and software to support it, that will assist the complexities around the electrification of the grid, and how do you get an aging grid to cope with the distortions created by having so much electrification thrown at it all at once. So that's a particular company within that portfolio. And then elsewhere, we've got businesses looking to address the commercial property market in terms of helping agents and landlords manage their properties better. That's Cato, Trumpet, which is helping the sales process for B2B software. So lots of different things, all very much in that same strategy of predominantly B2B software with health tech and a growing allocation to deep tech in time. So if we move to the next slide, the other important part of what we do is to support our portfolio, and that continued last year, and we had further investments into Mandra, TEM, which is in our climate tech sort of allocation. So that's matching the renewable energy generators and matching their electricity generation to SME customers. Converter, which is again on that theme of helping enterprises in how they sell. And then finally, Infact, which is within our fintech portfolio, which is all around assessing credit, particularly in real time. So if we move to the next slide, I shared in my opening remarks that the sale of Regress was an important driver of value in the year, and this just to put some numbers on that. So this was an investment that we were in for the best, over a decade. But what we did here was we delivered a 7 times return over that period, and that delivered specifically to this fund 5.8 million and over 60 million to all the Albion VCs. So this was a software particularly around the encryption of email, but it had grown into a broader security platform, which we sold to a US buyer no before. So this is very much what we're in the business of doing, and this was an investment that was in the top 3 prior to sale. Next slide, please. What are we doing? We're investing either really quite early, which is we call seed. So that's when these businesses are very early indeed. But we have the ability to invest sort of right the way through to Series B. And Series B would be when a company's got a reasonable number of employees and reasonably significant revenue. But we're not frightened of investing early, and we see that ability and that to invest in these young companies as how we create value. So all of those companies in our top 3 were all very small when we first invested, and that is very much what venture is all about. They won't all succeed. but those that do succeed, and providing you continue to support them and stay invested in them, that's how you create good performance in a venture portfolio. But it is about backing long-term trends, and that's why you see healthcare as a big theme. That's why you see software being a big theme. These are significant long-term opportunities for an investor. It is very much about business to business. We don't target consumer-facing businesses because we're trying to take away the potential impact of consumer cycles and economic shocks. And as I've already said, it's very much with a focus on software and healthcare. So if we go to the next slide. Well, it would be remiss of me not to echo Clive's opening comments, which was a big thank you to Fiona Willicombe, who leaves the board today and has been a huge support to Albion, as well as an excellent director of both of the Albion King's Arms Yard VCT and for the short time on technology in general since the merger. Fiona has been involved in the VCT sector for a considerable period of time. So she was formerly chair of an Artemis VCT and a Maven VCT, and is today chair of Maven Renovar VCT, which some of you may know as a Marty Aim VCT. So Fiona knows VCTs very well. She's been a great resource both as a director of the fund, but also as a source of great support to Albion. So thank you very much, Fiona, and we'll very much would like to keep in touch. Next slide, please. So looking forward, always a difficult one, particularly with the news over the weekend and before of yet another front opening up in the Middle East with Israel directly attacking Iran. So there is, I'm afraid, going to continue to be that ongoing geopolitical backdrop. I think we just have to accept that we have to operate in that environment, but it clearly doesn't make our life any easier. There is also a lot of uncertainty about what the Trump administration plans to do around areas like tariffs. Now, software to date has not been impacted directly by tariffs, but whenever there is uncertainty facing businesses, and particularly the sorts of buyers of software, that can have a knock-on effect to what we do. But what we must do is continue to support the companies that are in our portfolio, to continue them growing. And in that regard, it's encouraging to see lots of good progress being made when I look at the individual companies within our portfolio. I think it's helpful that we have avoided exposure to the discretionary consumer, so i.e. not having businesses selling to consumers. We've got a good level of cash. I think cash is very valuable, both in terms of supporting our portfolios, but also looking to continue our active new investment activities. And indeed, we've got a number of new investments recently made and in progress as I speak today. So lots to be positive about, but clearly keeping a weather eye on the broader world around us and the impact that has on sort of economic activity. So if I move to the next slide, just a quick preview of the Q1 results that have just been announced. So this covers the 3 months to March, so quarter one of the financial year, and we've just announced a increased NAV, which increased by 0.6% for the quarter. So not a modest movement in the right direction. AGMs, as you can tell from this AGM, we are proposing to continue to have as virtual. We both have good attendance at the actual AGM, but what we are seeing is a huge number of people watching the recording subsequently. But it doesn't make up for the ability to be in a same physical location as our shareholders. And I know the board would join me in saying how much we enjoy meeting shareholders at our annual shareholder event, where we can run a more full program across the 3 Albion VCTs and look with portfolio companies, economists and the like. And we're planning to do that again. That is on the 18th of November. And again, it'll be at number 11 Cavendish Square. So if you'd like a place there, and I do encourage people to come, places are limited. So if you drop a line to info@albion.capital to reserve your place. So that's all the planning for that is in full flow at the moment. Just a quick update on where we are. I always like to just keep everyone abreast of where the top three investments are in terms of what they account for NAV. And as of 31st of March, that's sitting at 28.8%. So it's come down a little bit from before, following the fundraise. On that note, I will hand back to Clive, who's going to run the Q&A session.
Thank you very much, Will. So we're now going to go into the Q&A session. And thank you for everyone who sent in some questions. I'm going to answer some and then hand over to Will. So we had one question that came in which related to having more information on the non-executive directors. And what we're going to do there is you'll see in the next annual report, we will provide more detail on all of us. And to reiterate what Will said, there's a great opportunity to meet us at the shareholder meeting in November. So again, just as Will has done, I'd encourage people to come along to that. And certainly some, if not all of us, will be there. Then, Will, I've got a couple of questions for you. The first is around the merger cost savings. I know you mentioned some of that in your presentation. So one question on merger cost savings, and then a second question on share allotment pricing. So over to you, Will.
Yes. So just thinking about the question around merger costs, and this is really around to what extent are we seeing those merger costs coming through? So the short answer to that is that we're 6 months into the post-merger. We've made good progress in line with the anticipated cost savings that were detailed in the merger documentations. Just by way of reminder, for those that haven't got that to hand, the aim for the Tech and Gen VCT was to save £433,000 each and every year going forward. And that is very much our view that it will be achievable and that we have been able to implement the various changes since the merger. So I think the short answer to that is yes, good progress being made. We continue to be confident that that is a deliverable number. So I think the second question was around the allotment. I will just read that out so in respect to the resolution for the authority to allot shares and for the disapplication of preemption rights, could you confirm if the shares will only be issued at a price at or above NAV? So that's the short answer is yes. So any new share issues that take place, they are issued at the most recently announced NAV, so i.e. an up-to-date NAV, and only, but would obviously be adjusted for any dividends where applicable. Any shares that are issued on the top-up offers are again issued at NAV plus costs, so therefore above NAV. So there is no dilution from those share issues as a result of this approach. So I hope that answers that question and provides a reassurance.
So thank you, Will. And just a general observation that we, of course, encourage people to send questions to the chairman email address, which I think we provided earlier. And what we will do is we'll respond on an individual basis where appropriate. So to everyone who sent in questions, thank you. And as I said, where appropriate, we will provide individual responses. So we're now going to go back to the formal business of the AGM. The full text of each of the resolutions were sent out in the notice of the meeting, and the board is recommending that members vote in favour of all the resolutions. And what I'm going to do now is briefly summarise these. So the first resolution is to receive and adopt the company's accounts for the year ended December 24, together with the strategic reports and reports of the directors and auditor. That's resolution 1. The second resolution is to approve the director's remuneration report for the year ending 31st of December 24. The third resolution is my own re-election as a director of the company. The fourth resolution is the re-election of David Bender as a director. The fifth resolution is the election of Simon Thorpe as a director of the company. The sixth resolution is the election of Swarupa Pathaji as a director of the company. The seventh resolution is the reappointment of Johnson Carmichael as auditors to hold office from the conclusion of the meeting to the conclusion of the next meeting at which the accounts are to be laid. The eighth resolution is to authorize the directors to agree the auditor's remuneration. The ninth resolution is to allow the directors to allot new shares. The 10th resolution is to approve the renewal of the company's dividend reinvestment scheme and authority to allot shares under the scheme. The penultimate resolution is a special resolution to give the directors the power to disapply preemption rights. And the final resolution, which is again a special resolution, is to authorize the company to make one or more market purchases of ordinary shares in the capital of the company. The results of the voting, including the proxy votes on each of the resolutions, will be announced after the AGM through a regulatory information service announcement. Additionally, the results will be published on Albion Capital's website as soon as is reasonably practical. I can confirm that the voting is now finished, and I now declare the poll closed. In the meantime, I will show on the screen the current proxy votes that have been received by the registrar. As you will note, the proxy votes are comfortably in favour of the proposed resolution. Thank you. That concludes the business of the AGM. I'd just like to thank all the members who've joined the AGM by webcast. And as I said before, the board welcomes any feedback you may have, which can be provided by sending an email to me at aatgchair@albion.capital. I'm now formally closing the AGM, and on behalf of the board, thank you again for joining your company's AGM, and I hope to see some of you at the shareholder meeting. So thank you very much. The meeting is now closed.